the wandering eye scenario will get you hurt in trading. Okay, so I want to make sure that you all go in with the right expectation, the mindset, the focus. And by doing it this way, it's going to be boring in the beginning. But once you see how we can see these things panning out every single time, it's the same fucking shit. It becomes entertaining. It's almost like the book you've read multiple times. You know the plot, you know the character engagements, and you know how it's going to end. Now, that same book that you read over and over and over again, you give it to your kid, or your dog gets a hold of it, chews it up, rips a couple pages out, or spills coffee on it, and you can't read a certain paragraph. Do you lose resolution if you go through that book and can't read that one or two paragraphs? You lose a little bit, but you are familiar. You still know what is likely to occur. You've been there before. It's kind of like a hologram. Okay, um, a hologram and how I'm going into a scientific. Well, I'll just go there. A hologram is an image that's formed with a capacity that allows for some things taken from it, and you'll still see it. You might lose a little bit of resolution, but you can still see it. Versus only being able to see black and white binary only. That's not what this is, because you're going to be able to see more than just one setup, which makes you much more effective as a trader. See, if you're following a logic like most retail things are, you're looking for this one pattern. You're looking for this one setup in this indicator. When it's oversold, you're trying to buy it. When it's overbought, you're trying to sell short. If the moving averages are pointing down, you're trying to go short. When an overbought reading happens in your indicator, that really confirms that it's probably time to sell. By that logic, once that pans out, and say the market starts to drop a little bit and it leaves the overbought condition, and you're between overbought and oversold, you're in that area where, hey, you're between setups. That was one of the frustrating things I had when I was using retail stuff and fumbling. Only when the market was going parabolically up, I felt that it was working, because I only used a 50-day moving average on the daily chart for my bias. If it was sloping up, I wanted to focus on being long, and then I used an hourly stochastics, slow stochastics, and I looked for type 1 bullish divergence, which is the classic lower low in price and a higher low in stochastics while it's oversold. Once the K and D crossed on the stochastic, that line, once that occurred, then I would go in the next day and I would buy strength at the open. And that's how I was trading. That was it. There was nothing to it more than that. Now, I was teaching people like I had figured out, how to end world hunger. This is to fix everything. And some of my students back from the 90s on America Online are actually still in this community here. Hi, Ray and Steve Michael Garner. The folks that have watched me evolve as a educator and as a mentor know full well the difference between today and how it was when I was just discovering how money can be made. But I can tell you, as a 50-year-old looking back, those instances, I really didn't know anything. Like, I didn't know anything. And I translated market success on just a whim. It just happened. Okay, it was coincidence that I happened to be long in a time when the market was going up. And I didn't understand it was going up because there was no way for it to do anything but that at the time. Everything was in a commercial bull market. It was just parabolic. Everything was just straight up. So anybody buying anything could have made money then. And that, to me, looking back, was very painful as a young man, because I was wanting it so badly to be skill when it was just happenstance. Whereas now I can talk to you in wisdom and know that that was not wisdom then. That was pure and absolute luck. Whereas now, today, I have something that's measurable, it's transferable, and other people are doing it, and they're making real money with it, not just market replay or paper trading or demo. They're really realizing profitable results, and they're handling that and spending it and doing whatever they want to do with it, as they should. But as a retail trader, if you're focused on whatever it is that they're teaching with retail, once that trade scenario starts, they train you to do what? Well, if you didn't take the trade, let it go and wait for the next trade setup. Well, what if it means that you have to wait for that crossing of the moving averages and they got to be sloping down, and then you got to wait for another overbought scenario to go short? That's a whole lot of wasted fucking time for me. Like I couldn't tolerate that. So one of the things that became a transition for me out of retail stuff is that even though if I was thinking that if the market was bearish, whatever market I was trading, and I was using a 50-day moving average to give me my bias, and then on the lower time frames, 4 hour and 1 hour, I would use a 10 and 20 moving average, exponential moving average. And if they were both pointing down and stacking, in other words, they're separating and pointing down both directions. If the daily at a 50-day moving average that was going down too, that to me was a very, very strong bearish bias. Then if I waited for an hourly overbought, that would get me in sync with a move that had already happened on a higher time frame where other traders that using that logic wouldn't even consider it. So what did I start doing without really knowing what I was doing? I was taking the fractal nature of price and breaking down a larger move into smaller moves that repeat the same way. So some of you are in here listening to me and you don't trade like I do. You have a lot of retail indicators and you have logic that are found in books and you still make money. God bless you. I'm not saying anything about you not being able to make money. I'm just saying the things I'm going to show you about price are going to help you ferret out the winners in your system right now. And you're going to understand why they're winning. And you're going to understand how your system is losing when it does and how you can reduce that effect and minimize it, which is, again, all I'm trying to do is help you. There's no sales pitch. Okay. I'm doing this because I love doing it. I love teaching. I love sharing this stuff with you. I love seeing you run with it and do well with it. And it motivates me. It keeps me going. It's my entire life. Okay. But if I can drop down into a bearish model like that using any other retail logic, it started this whole mindset. Okay, if I am really thinking that this is the only time trades are occurring when this retail trader model is saying it's a sell, what's going on when the indicator that I'm using for overbought and oversold, who's buying and selling when it's in between overbought and oversold? So I started mining that, going in there and studying price action in those periods. And then I discovered that between overbought and oversold, there was these little micro gaps, fair value gaps. That's where I got the whole term. That's why I gave you the logic and taught you that. Okay. In between the best entry and the exit of the best case scenario, your mindset should be thinking, okay, the market's going to be reaching for something. And then the retail model was once it gets oversold and diverges bullishly. That was my exit strategy. Once I became a trader that could sell short, which took a very long time because it didn't make any sense for me to be able to sell something I don't have. Short selling was weird to me. But my counter trade, or the way I would kill a trade, is if I'm short, I would use a divergence that would be bearish. And then I would look for a price to go lower the next trading day at the opening. I would look for a price below the opening price. And then boom, once it traded down to that price, the weakness of going below the opening price would get me in. And then I would do 2 times whatever the highest high from the entry point, whatever that amount of movement would be. That's where my stop loss would be. That's how I did it when I was trading with the job, when I was going around filling vending machines, driving all around Baltimore, in and out of places all the time, using a quote track machine, little looks like a transistor radio duct taped to my work truck windshield. Chart books laying piled up next to me in my lunchbox. I was a crazy ass looking freak. Like, I mean, I'm running around. I got charts rolled up in my back pocket, and I got quote track next to me while I'm filling candy machines up. Okay, I'm putting candy bars. You know, when you go to a hospital put your dollar bill in there, or you can't get a candy bar for $1 now, but back when I was doing it, it was 45 cents a candy bar, 50 cents a candy bar, 50 cents for a can of soda. So I'm filling this vending machine, and I got my quote track laying in the empty column that I haven't put Twix in, or Hershey bars in, or potato chips in. Okay, so I'm watching price, and I'm looking at it. I'm saying, okay, all right, it should be filling me right now. On my stop order, I should be short right now on soybeans. So you don't have to be in here watching real time data. You don't have to be day trading. If you're going to learn how to do this and you know that you can't be an intraday trader, you need to trade on higher time frame trading ideas. I'm going to teach you how to do that this year too. But back to the development of fair value gaps. When I was looking at the range between a price run that would be bearish, between the actual entry that would be ideal, I may or may not been able to participate in that move. And that was a very great deal of stress and anxiety and frustration for me, because if I missed something, if I didn't have the prowess to observe it before it formed and then it started breaking down, I would feel like I'm going to miss that move. Once it starts moving, and you probably feel this is the same way when you see me talk about a move, or I've highlighted certain things, or maybe you just found it on your own and there's nothing wrong with that. That's great. The market starts to move. You know where it's likely to go. You know what it's reaching for. There's an equal high, there's a single high up there, or it's going to a fair value gap that's above the marketplace. You know, in your heart of hearts, in your gut, you know exactly that son of a bitch is going right up there, but it's already started moving. So what do? Plunge in there with a demo, buy it right there, or sell it if you think it's going down. But then what happens is you're now, in your mind, you're saying, I don't care if it comes down against me because it's a demo, it can't hurt me. But if it goes up there, fuck yeah, I was right. Look at that. Woo, video game trading. What are you teaching yourself? Don't worry about the loss because it can't hurt you because you're in a demo. But feel good about the transaction if it goes up there because you're right. Now stop and think about that for a second, folks. You're doing everything wrong. You're teaching yourself not to respect the risk. That's the paramount issue when you go into trading. You have to have a stop. You have to know why you're putting a stop there and how much are you risking. Some of you are just doing simple average 50 contracts or 50 lots on your trades on trading gold. You're not trading no 50 contracts of gold. And you're not adding every time it goes up 2 points. You see the MT4 guys that they got 30 trades of the same market, and their only difference in price entry is 1 or 2 points. And they're showing you their 50,000, their 60,000, $70,000 wins, all stacked up. I have never liked a post like that. You didn't take that trade. That's not a real trade. That's just you seeing what will happen if you did that. And you're getting drunk on math. And that's dumb. When you're looking at a market move that you think is going to go to a specific price level and it's already started, you wait for a smaller time frame fair value gap. When it trades down into that, then you can engage it. When it starts running, observe it from that point on. But you have to know where the stop loss will be, and that is below the fair value gap. So when I started breaking down the market like that, that's okay. Soybeans started taking off. I missed the move. Live cattle. These are all commodity markets, by the way. You're probably thinking, what the hell is he talking about? Soybeans and live cattle. I was a commodity trader when I first started. So when I started to trade in the bond market, the 30-year treasury bond, and when I was trading the S&P futures contract, I would see these movements after the fact sometimes. And I would feel like I got to rush to get in there. And I missed it. I missed it. So my focus took me into studying how I could engage a move that already started. Because my tendency is, tell me something that you can't do, and I'll find you a dozen fucking ways where I can do it better than you could ever imagine. Because I have a chip on my shoulder and I'm obsessively compulsive. And a grandmother that no longer lives anymore told me something that scarred me. Said I was lazy when I wasn't lazy. I was fucking tired. And she was expecting me to do something that was beyond my capability as a 11-year-old kid. So when I had her tell me I was lazy, honey, you're lazy, I was like, You said what? So that's why you see me work the way I do. My work ethic in everything I fucking do is off the charts. I always over deliver. I always do that because nobody's saying I'm fucking lazy. I can tell you you're lazy. I can say that to you because if you're not putting in hours each week, if you're not making dozens of pages of notes each week, not 5 little lines on a page and scribble and say, oh, I did the work. Here's my notes. That's fucking bullshit. That's comic strips. Okay. That's what that is. You're wasting time. People that want to learn how to do this, they're going to pour themselves into this and they're going to get what they're looking for and find more than they were looking for. So I had to go in and figure out how to compensate and build and develop a coping skill for this fear of missing out. See, you have no idea what the fuck you're doing, but you want to go in there with a funded account or a live account and try to make something happen, ignoring the risks, not really understanding the detrimental barriers, obstacles, impossibilities that you're building these walls in front of you by doing it incorrectly. They're going to weigh on you heavily mentally. You're going to see them as they're just too much for me to get through because you're doing it wrong. So I'm not saying I'm smart, okay? A lot of prayer went into this, a lot of prayer. And you can be an atheist, you can believe whatever you want to believe. I'm telling you, this is how I got here. When I looked at moves and I couldn't get myself to accept the fact that I wasn't smart enough in my early days to see that move before it started, and you had a big down day, I knew at that moment it's going to go down to this level here on the daily chart or up here above some old high daily chart in deference to the bias of most bullish or bearish. So I wanted to find a way to build a coping mechanism that would make sense for me because nobody in books, none of the books, I got over 2,000 of them, courses, everything. I bought everything you can put your fucking hands on. If it was released in the 90s and the early 2000s, in 2006, like that was the last time I bought anything. And it was always the same bullshit. And the things that I teach on, none of these jokers talk about. Precision elements, time, where to get in, why your stop loss should be where it's at. Everything you learn in retail is stop below the old swing low if you're long, stop above the old swing high if you're short. And it's all directly related to the percent of risk that you're willing to take as a trader, which is the universal 2%. Everything about that's wrong. Everything about that shit is wrong. And you're doing it thinking that you're going to be the exception to the rule. And then you can go on social media and say, I climbed a mountain. That's it. I'm putting my flag here at the top of the mountain. No one's ever done it like me. When you don't realize what you're learning is misinformation. You have so many factors against you doing that shit, but it doesn't feel that way because you bought the book. You paid for the book. You took the time to read that book. You have now joined a religious cult. You think I'm a cult leader. That's a cult. Retail theory is a cult. It keeps doing the wrong shit that you all keep sipping the Kool-Aid thinking you're going to be able to get something out of that. You're getting the same shit, the same bullshit everybody else gets. Losses, drawdown, blown accounts, and misery and regret because you are falling in love with a market and in a potential experience to change the course of your life, but you can't make it work with the shit that you're trying to spend money on. The smart ones say, fuck this early and say, I can't do this. And they don't ever invest any more money in the retail stuff. And they just say that nobody's making money. And it's not true, but largely it's true. So I had to go in between the overbought and oversold conditions with my retail bullshit that I was trying to use. And I come up with ways how I could go in and engage. And then once I was made privy to how markets are really booked and met with real market makers, not Goldman Sachs people, okay? None of that shit. not trade desk managers that are controlling the flow for their customer base. That's not a market maker. You're a dealer. Okay. That's all you are. You are not making the price. You can engage and transact in that price feed at that very moment, but you are not fucking making the market. When you discover how all this shit is rigged and it's designed to do these certain things at certain times of the day to deliver a certain high or low, it changes everything. It changes everything. You quickly put aside the very shit that they're poisoning everybody else with. All the misinformation, all the bullshit. And you focus on the stuff that matters most. Where's the truth in all this stuff? If it's overbought, oversold, then that's what causes the market to go up and down. If it's supply and demand, and that causes the market to go up and down, then why the hell is it that that shit isn't making millionaires every single time someone sits down with it? Why aren't they all finding success? Why aren't they finding precision? They're not. Because it has a resemblance. It resembles something that they saw work in a book. And when I bought all these books and I bought all these courses and I subscribed and bowed my head down to all these gurus, I was a young man too. And I believe there's people out there that should have been worshipped, that should have been lifted up and held above everyone else. Heroes, titans. There is none. I'm not one of them. And your friend and family member on fucking social media that you think is growing to be into be some hero level shit. They're all people just like you and I. And the more they show the shit in hindsight and they can't teach it and prove that it can be transferable knowledge with precision based elements with time, then it's all just retail. And retail is just a catalyst. A good money manager can make money with retail. A good money manager can make money with a heads or tails flip of a coin. I didn't want to be like that. I wanted to be someone that knew exactly what the hell they're doing, why they're doing it. And if I am wrong, I'm okay with being wrong if I understand why I was wrong. But when I was using retail shit, it never made sense why my trade, when it would fail, I got stopped out. Why the fuck did this happen? The stochastics was coming down, the moving averages on all the time frames were going down. I had a fucking bear flag. Everything was going lower. And the people on CNBC, it was FNN back then, Financial News Network. Shit's different now. They were talking about, oh yeah, the market's gonna go, there's a bumper crop of soybeans, which means there's a lot more supply, so therefore the price shouldn't go uh, higher. So I'm going short. I got everything in my favor, right? I got the fundamentals. There's a bumper crop. So that means a whole lot of soybeans are hitting the market. There's no reason for it to go up. And here I am, I'm going short. I'm in there. It's already diverged bearishly. It's moving down. All the moving averages are sloping down. Everything looks fucking great. I'm looking to make 50 cents on this move. And what the fuck happens? It goes up 18 fucking cents in the same day. Now, how do you rationalize a response to that that makes sense, that's palatable? You don't. You put your fucking fist through the fucking monitor like I did. Pick the fucking broken mechanism that was still resembling a monitor and throw it across the fucking room. That's how I coped with it. That's exactly how I coped with it. And I went through a lot of monitors. A lot of monitors like that. I wasn't prepared to have multiple monitors back then. I have a lot of monitors now, but if I didn't know how to trade, it would be very, very costly for me to have that coping skill today. So I had to go in and figure out why I'm doing what I'm doing. And if I'm wrong, I'm okay with being wrong because I understand I'm wrong. The market's right. I'm wrong. The market's right. So I have to do what? I have to align myself with the market, not align myself with the guru's logic. I got to align myself with an indicator. Fuck, I do. I don't need to do that. I need to align myself with the open, high, low, and closed. That's what I'm aligning with. That's why my charts are naked. That's why I'm showing you only annotations to take your attention to a very specific element about a candle, a level, not a fucking zone. Okay. When I'm talking about a fair value gap, what levels am I talking about? The highest point of the fair value gap, the exact middle of the fair value gap, and the low of the fair value gap. That's 3 finite levels. It's not a zone. I'm not going out there and pulling one out of my ass and saying, well, we're going to do a supply zone here or a demand zone here. And where are you going to buy in that? Where are you going to sell in that? That's why it's a fallacy. It's all bullshit. It leaves enough subjectivity so that way they can always go back and say, look at this zone. Look how it reacted in this zone. Fuck that. I'm telling you a very specific level. Fuck everything else. Everything else is bullshit. I'm telling you exactly when these gaps should not fill. So that means what level should you be focusing on? The high end of it or the low end of it, not the middle, not the opposing end of it. See a difference there? That took decades to get that. That took decades to know with confidence that I'm going to be able to take this trade, enter here, my stop loss should be right here, laser precise. A lot of prayer. And that still quiet voice taught me that. When nobody, not like what you're hearing here, a foul mouth, manic, I had nobody sitting next to me encourage me along. And I had to become a fiend and dismiss everything and everyone around me. Relationships, friends, hobbies, all of that. I cast it aside. And all of my waking consciousness was poured into this. While driving a truck with my left foot laying up on the steering wheel, steering, while I'm eating a cup of fucking noodles, I'm looking at a chart book going across the Key Bridge. Is that safe? Nope. But I was dialed the fuck in. High winds could have pushed me into the Jersey Wall part of the bridge, and it caused all kinds of accidents. That's how recklessly I was pouring myself into this all day long, all day long, sleeping sometimes 3 hours, maybe, and getting up and doing the same thing. On Saturday, driving down to Fayette Street to a nursing home to fill their vending machines from my car, my Eagle Talon TSI all-wheel drive white car. I've always preferred white. Go down there, service that. The whole time, the markets aren't trading, but I got chart books laying in front of me in the machines as I'm putting candy bars in there. I'm pouring myself into it. Maniac. That was how it was. And you have to have that same tenacity. You have to know that you're going to do this no matter what. Anybody that's around you that's telling you negative shit that you can't do this, you shouldn't do this, you're wasting your time. Fuck them. Fuck them. Fuck them. Because I'm going to tell you, every one of my fucking friends, when I first started doing this shit, they said, you're crazy. You're going to lose your ass. I lost my first account and second account and third account. I did. But you're listening to me now, aren't you?